Oh, look at that. She's a beauty. How much is it? £1,495. Oh, no chance.
In 2005, a Moncler Maya jacket would go for around £750. In 2020, the price increased to £850. And 2021, it was £980. Now, last year, it finally crossed the £1,000 mark.
Moncler has long transcended its humble beginnings to become a leading powerhouse in the world of uber luxury fashion, a journey defined by resilience, innovation, and bold creativity. Now, as Moncler Group reports its stellar end of 2024 financial results, it's the perfect moment to reflect on the brand's remarkable evolution and how Moncler went from broke to billions. Moncler Group, the owner of both Moncler and Stone Island, recently announced a 7% increase in full-year profits, hitting just under £2.6 billion for the year ending 31st of December 2024, with a reported revenue growth of 4%, solidifying the brand's steady upward trajectory. The Moncler brand itself posted an 8% rise in revenues, reaching £2.2 billion. This growth was fueled by a strong fourth quarter, with Q4 revenues up 8%. A key driver behind this success was the booming direct-to-consumer channel, a business strategy where a company sells products directly to consumers, bypassing traditional retailers. Notably, all regions saw improved performance compared to the previous quarter. The EMEA region, Europe, the Middle East and Africa stood out, with Moncler brand sales soaring 35% to €949.3 million, €790.4 million, boosted by robust demand from both tourists and locals. Moncler's rapid rise to luxury status has been an interesting one to watch, but where did it all start from, and how did they grow to the powerhouse they are today? Moncler began in 1952, founded by René Ramillon in the mountains of Monastier de Clermont near Grenoble, initially producing down-filled sleeping bags and tents. The iconic down jacket was born to protect Moncler's workers from the cold, but gained wider recognition when legendary French mountaineer Lionel Terray asked Ramillon to design gear for extreme climates. By the 1980s, Moncler's brightly colored jackets became a bold fashion statement among city youth, contrasting with the more understated parkas of student protesters. However, the brand struggled in the 90s under then-owner Finpart, which owned other labels like Henry Cotton's and Cerruti. A turning point came in 2003 when Remo Ruffini, an Italian entrepreneur with deep roots in fashion, acquired a majority stake in Moncler. Born in Como in 1961, Ruffini started his career working for his father's US-based clothing company before founding his own brand, New England, which he sold to the Stefanel Group. His vision for Moncler was clear: elevate it from functional mountain gear to a symbol of modern luxury. Ruffini ushered in what he called the era of the global duvet, collaborating with designers like Alessandra Fascinetti and Tom Brown to craft high-end collections. By 2008, Moncler's revenue hit €290 million, climbing to €372 million in 2009, despite the global financial crisis. As flagship stores opened in Paris, Milan, New York, and London, Moncler prepared for a stock market listing. A plan paused in 2010 due to market conditions. Instead, the French fund Eurazeo acquired a 45% stake, further solidifying Moncler's place in the world of luxury fashion. The 2013 IPO on the Milan Stock Exchange was a resounding success, with shares surging 47% on their first day of trading. Moncler continued to push boundaries with the 2018 launch of the Moncler Genius Project, a bold initiative where leading designers craft unique collections, reinterpreting the brand's identity, leading to collaborations with brands such as Moncler, Fragments, Ami, Pharrell Williams, Adidas, and many others. While Moncler stole the spotlight, Stone Island, which Moncler fully acquired in 2021, experienced a more complex year. Full-year revenues dipped 1% to £334.4 million. However, Q4 saw a promising 10% uptick, the DTC channel grew by 15%, and the wholesale channel, though down 1%, showed notable improvement compared to earlier quarters. In Asia, Stone Island revenues rose 23% to €105.2 million, £87.6 million, driven by strong performances in Japan and an encouraging rebound in China, though Korea's market remained subdued. In 2024, the group achieved impressive results, with Moncler and Stone Island both posting double-digit growth in the DTC channel, pushing revenues beyond £2.2 billion while maintaining a 29.5% EBIT margin. This highlights the strength of their business model and operational efficiency. Moncler's groundbreaking events in St. Moritz and Shanghai showcased its disruptive creativity, while Stone Island solidified its distinct identity through impactful brand initiatives. In addition, LVMH, with its portfolio of luxury brands such as Louis Vuitton, Dior, Fendi, and Celine, acquired a 10% stake in Double R, the investment vehicle that owns Moncler. Looking ahead to 2025, despite global economic uncertainties, the group remains confident in its ability to adapt and continue driving innovation. Focused on its heritage and ambitious goals, it is important to note, however, that with the ever-changing economic climate and notable shifts in consumer spending and trends, it remains to be seen whether Moncler can sustain its sharp rise in these challenging times for the luxury market. Only time will tell. We will be keeping a close eye to see how this pans out.